As soon as Friday, the Treasury Department could release a plan detailing options for scaling back the government's stake in Fannie Mae and Freddie Mac. House Republicans didn't wait. They held a hearing this afternoon on the very subject. Bloomberg's chief Washington correspondent Peter Cook up on the Hill with a key lawmaker in this debate, Massachusetts Democrat Barney Frank. Peter.
Carol, thanks very much. I'm here with House Financial Services Committee Minority Ranking Member Barney Frank of Massachusetts. Thank you for the time, as always. Let me start with the Treasury report that we've been told is coming on Friday. First of all, have you seen the report, and what's your level of confidence that this report is going to provide at least a starting point for the debate?
Well, I haven't seen it, and no, I don't have any great confidence. In fact, I think my Republican friends are kind of posturing here. They are not people who are prone to taking not only not instruction, but even advice from the Obama administration. And they're kind of claiming now that they can't move on this question of the GSEs until they have the administration. The real problem is that having said last year that we should move and it was easy and why didn't we do it, they are now acknowledging that it's very hard and that they are divided, that they cannot themselves muster, I think, support for a bill. And so instead of acknowledging that, they're blaming the administration. The notion that they can't move ahead with legislation. They introduced a bill last year and criticized us for not adopting it. I don't understand why the bill they were ready to pass last year isn't a basis for legislating this year. And instead they're saying, oh, we can't do anything until the Obama administration gives us guidance.
Our understanding is that the Obama administration will present options, will present the fully private option that many Republicans have talked about, a hybrid system, and perhaps a fully nationalized system. What's your own thought right now as to what the most reasonable course of action between those three might be?
I'm still thinking about it myself, and that's why I'm glad to have my Republican colleagues retroactively agree with me that we weren't ready to do it last year. The question is, there needs to be some kind of guarantee, I think. We have, however, made mortgages better. The mortgages that were being sold and securitized in the past, one, there were a lot of bad mortgages that should have been made. The financial reform bill made them illegal. There will be no more of these 2 to 28 first 2-year and then a 28-year upward tick. No more pick what you pay. No more no documentation loans. So mortgages are going to be better. Secondly, we have done what I think is the most important thing, which is to say, if you're going to make loans and then sell them, you keep 5%, and the first 5% of losses are yours, unless you've got at least like a 20% down payment. So we're going to be selling better mortgages. I don't think you need as much guarantee, and I'm ready to hear from the market as to whether they think we would need a guarantee or not. I also do believe strongly, and I've felt this for a long time, to the extent that we are subsidizing housing, it should not be home ownership. And I've been a critic of low-income home ownership artificially pushed for a long time. It should be decent rental housing. And instead of having the mortgage decision be a subsidizable decision, we should generate revenue by market rate transactions and put some of that into rental housing.
Make the case if you can, and I've heard you do this before, and you were challenged somewhat today by Congressman Henseling, his proposal to fully privatize. Make the case why there needs to be a government role here.
No, I haven't made that case. I don't know. I have not said that, and I just said I don't know
some
that.
Government guarantee.
I just said I don't know what the answer is. I do think we have to end the hybrid. Henseling didn't challenge me on that. Henseling was a little embarrassed because he filed the bill last year that he said was the answer. He pushed for us to put it into the financial reform bill. He was very angry when we rejected it. Now he's walked away from it. They had a hearing today, and they didn't even talk about that bill. I believe then and believe now that there was a question. Some kind of guarantee is probably useful for having 30-year mortgages. But who issues the guarantee and how much has to be paid for it is a question I want to further explore.
Are there steps that you think should be taken in the short term before we solve the long-term problems in terms of reducing the government footprint here? Some people talked about allowing the conforming loan limits to be reduced as scheduled.
Letting the conforming loan limits go down has a great element of geographic discrimination. Housing prices are the most variable price in America by geography. Most prices are pretty similar. But if you reduce the loan limit, it was originally $400,000, you're not just banning luxury housing in San Francisco or Los Angeles or much of Chicago or New York or Boston. You're banning all housing. Well, the conforming loan limit, people should understand, it's based on median price. We're not talking about an overall national increase. What we're saying is, yes, there should be a restriction. Luxury housing shouldn't be included. But to do that fairly, you have to set it at a median price that takes into account housing variations. So no, I think it's good to start reducing it, but not in a way that says it'll be fully operational in Nebraska and Mississippi, but it won't operate in much of California, New York, Chicago, or Boston.
Is this a problem that's going to take 5 years to solve, more than that? I mean, people who talk about legislation this year, that's not really going to happen, is it?
Well, it's up to the Republicans in the House. I mean, frankly, they told me last year they were ready to do it. They would have to negotiate with the Senate. There is this point. Fannie and Freddie are not now losing money. Remember, they were losing a lot of money. In 2007, when I became chairman, we passed the bill that the Bush administration wanted. Using that authority in 2008, when the Senate finally passed it, they were put into conservatorship. So the losses are losses that were incurred before that. Since that time, they've been actually performing a kind of a housing function. That's why the Republicans, for all of their talking about it last year, aren't ready to move it to shut them down now. It's going to take some time, but it shouldn't take 5 years. I think by the end of this year, we should have a agreement. And the question is, and we need to do some examination, to what extent does there have to be a guarantee? What percentage of guarantee? How much is the guarantee paid for? Does there have to be a government role in the guarantee? I'm open to hearing what people in the market will tell us about that.
All right, Congressman Frank, as always, appreciate it. The latest here, the first hearing of many on Fannie Mae and Freddie Mac here on Capitol Hill. Matt and Carol will send it back to you guys.
All right.